Ladies and gentlemen, good evening and happy Wednesday to everyone. It is the 25th of January 2017. This is Christopher Aaron, and we are going to focus on the action in silver today. I usually have gold as a primary focus in these videos, but I want to look at silver in a little bit more depth today. Even though silver generally is lagging gold, at certain occasions, such as right now, the patterns are more clear in silver. That happens to be the case right now. I'm seeing some clearer bottoming patterns in silver, even though it may lag to a certain extent in the initial part of the rise. So I want to show you that in this video. And as we look at the action over the last few days, let's start with gold here for a second. Seeing a bit of that weakness. It's been this grind slightly above and now slightly below the $1,200 level for the last couple of weeks. This still does look like the intermediate term top that I was forming, and I would not be surprised to see some further downside pressure over the next several days and several weeks, especially in gold here. And as we look at silver, again, seeing that, but silver showing some resilience here, getting bought back very aggressively here on this dip just above 1670. So I do believe there is some downside potential still in the metals over the next couple of weeks, but that this important bottom is in the process of forming here. And I want to show you this a little bit more clearly. Let's look at this for silver. And as we do that, we will call up the trusty key here on the side. Now, we're looking at the last 2.5 years, basically, of price action in silver. And this is very clear here what's happening in the silver market. You had this series of highs between 1725 here and 1850, shown by the red band. And this level was hit on a number of occasions over the last number of years. You can see here in late 2014, coming up right here to about 1775. 1725 here again in late 2014, early 2015 hitting near $18.50, once again 1725, 1775, and then notice in the initial part of the rise last year, hitting here again just around 1775 a couple times before. What happened? Now this was very important, this break above this resistance zone here that had been holding for the better part of 2 years. So even though the price came back down, this resistance zone failed to act as support, except for in these couple of bounces here last summer and fall. Even so, we see that there is underlying demand in the silver market. The fact that silver was able to burst through this resistance zone here and make basically spend several months above that resistance zone is telling me that there is strong waves of underlying demand in the silver market that are kind of latent at this point, and we will see when they manifest again. But that's just to set the backdrop here for silver. We have this real jagged, it's kind of like this up and down jagged sort of action every few months in the silver market. And we've had the break of this steep wedge formation that I said was going to be something of a short-term bottom, and we'll see what that manifests into. So here we are, and notice once again we've hit this 1725 level here in silver, briefly spiking to 1730, I believe, last week, but nominally right around 1725. Same as this level here from December, and some of these levels right in here from going back into 2014, 2015. So there's a real clear resistance level here at 1725. Now, this all looks very jagged, right? And we'll look at some of the more recent term action here for silver in just a second. But let me zoom this out for a second just to make sure everyone remembers what's happening here in the silver market. What we're seeing with all these jagged moves up and down is really, if you take a step back, it's really this long-term basing pattern that is forming here between 14 and 25. So it's quite a range. And we had the first indication that this was going to be breaking when I started making these videos, basically mid to late 2015, and I started to see the development of this terminal wedge pattern, and I started banging the table and saying, guys, there could be one or two more down legs. Sure enough, we had one more, but this is looking like it's forming the terminal stages of what was a 70% drop. And when you have an asset that drops 70%, that cannot go to zero, you've got to start looking at something and saying, maybe we're forming a bottom here. And that's basically what I started to see forming at this time. Now, I did wait until 2015 to start releasing this research for the reason that I did not have sufficient evidence at each of these bounces in 2012 and 2013 to say that we were getting close to that point yet. So I'm not trying to toot my own horn here, except to say that there was a method to my madness, and there is a method to my research here as far as the timing is concerned. And what we have now, after we have broken this bottoming wedge pattern, you had the first initial surge higher in silver and the first retracement to come back. Okay, so the downtrend that is forming now in silver that is getting closer to being broken will represent the first downtrend from the absolute bottom. I do believe this will prove to be the absolute low back in 2015, and the low that is forming right now will be a higher secondary low. That is my prediction for what we are seeing right now in silver. So we'll be looking at the breaking of the first significant downtrend from the bottom of this pattern. So what does that mean when you have the first breaking of a significant downtrend? It does not mean, as some of the people who are trying to scare you into thinking that if you don't buy everything right now this second that you're going to miss your opportunity. I do not believe that is exactly the case, although if the price does drop back into the $15 an ounce range, I have a strong suspicion that may be the last time to buy around 15 or 15.50, perhaps for the rest of our lives. If this was the significant long-term bottom here at 13.65 that I believe it was in December of 2015, and this is a secondary low, we would then be looking at a series of marginally higher highs and marginally higher lows, and these waves setting up over the next perhaps 2 years or so, perhaps climbing back to a new high around 22, and then kind of scaring everyone again this time next year, maybe dropping back to 18, and wouldn't we know it, silver almost always surprises us on the downside, so maybe it falls all the way back to 16.50 again toward the later part of 2017, right? And then another bounce like this, back up to, let's say, 23, and then another drop back down to 18, convincing everyone that it will never break out of this low 20s to teens region here for the price of silver. And in sum, we'll be looking at, this is going to be a very healthy basing pattern when you really look at how this is forming up here. And the old investment adage is, the bigger the base, the bigger the move to come. So I think a 5 to 6 year basing pattern here in silver is going to set the stage for eventually a breaking out. And I can't pinpoint the exact time yet. I have to see how these waves play in. Do the waves form a higher high versus the 2016 high, or do they form a lower high, in which case we'll be looking at more of a consolidation pattern before maybe a surge back to 25 and then another consolidation. So this could take a number of formats right now. But this is to say that I think the breaking of this first downtrend that we have from the absolute lows will be a very significant breaking here of a trend pattern. Now let's zoom this in really close. So here we were talking from the absolute lows of late 2015, and this is that first primary decline trend that we've had. And I do think that people that were only looking at this from the very short-term time perspective over 2016 will look back and say, man, how could I get scared out of the market just from this move around 21 back down to 16 or so. I think this will be really insignificant in the long term, but over the short run, we can see how violent these patterns are, especially if you're trading some of the leveraged instruments. So what do I see happening here? Again, we have this 1725 resistance level here. You can see that by the black line. We're talking horizontal resistance. We're talking this served as support here in early October, failed. Silver hit that level again right here, 1725 in December, and is hitting it again right now. So on the positive side, we can see that silver, even though it made a lower low here in late December, it is matching the high. Okay, so this is a good sign. So it's increasing the odds now by matching this high. It's increasing the odds that whatever drawdown is to come next, and I do believe there's perhaps a month or so of a correction that needs to unfold here. It increases the odds that this correction may not come all the way back down to the 1575 low here from December of 2016. So we may be looking at a low coming back down maybe to 16, maybe 1625, 1650. Let's see how this unfolds. But I think what is setting up here, guys, is at some point in the next 2 to 3 months to be breaking this primary downtrend. And that will be, this will be really the first downtrend of what I believe is a new bull market. So we'll look back at this one. We'll have a good reference to understand the playbook. We'll get a good sense of how these things work out, how scary they can be. We'll remember back to some of the emotions that we felt in this surge here, where it just seemed like, my God, you got to buy now. It's just going straight up. And then what do you know? There's a 6-month correction that follows, okay? So this will be a very good playbook for us to follow here over the next few years. That's what I expect for silver here over the next 2 to 3 months. Let's see how this plays out. Now, I do want to, this is a chart that I have never showed before, and this is for more of some of my clients who are interested in the silver mining companies. And as you know, we are getting ready to make a large new batch of purchases here at any point over the next few weeks to 2 or 3 months. And we are going to be overweighting the silver miners this time around. The portfolio that I maintain here, the last time we were more heavily weighted in gold equities, and we had some really good show of strength by the silver mining equities this time. And I am going to be overweighting silver, perhaps even as much as 50% in the silver equities for the next rise here. But what I wanted to show, this I have not shown this chart, I don't believe, ever here. What we're looking at is the XAU Gold and Silver Miners Index divided by the price of silver, okay? We usually look at this chart as the XAU divided by the price of gold. So what we're looking at right now in layman's terms is the valuation of the sum of the large cap silver mining companies expressed as a percentage of the value of silver itself, okay? How much are the silver companies worth compared to how much silver is worth? So in other words, when this ratio is moving up this way toward the extremes from the 90s, it means that silver as a metal is worth less and that the silver miners are worth more. And as we've seen right here, when you get down to these low readings, it means that silver as a metal is worth more and the silver miners are worth less. So we're looking at the relative valuation here of the silver miners relative to their own product, which is silver. And what you can see here is, I mean, here we go again, these long-term wedge-shaped formations, right? You can see here with the magenta line, these highs coming down, the lows coming down as well. And what happened here late 2015, right at the beginning of 2016, you broke this wedge formation, okay? And this represents, if you look at what's happening here, you're looking at the cheapest, the least expensive that the silver miners have been relative to the price of silver ever. Okay? As far as we have data going back, I mean, the XAU index goes back to 1984. But prior to that, we can look at some of the individual silver mining companies that make up the index. And this average here was right around, it varied between 10 and roughly 20, basically going back for several generations. This here is a historical anomaly. You are looking at the cheapest that the silver miners have ever been. And basically, the closest that this ratio has ever gotten to zero, and I've made this point a number of times before too, which is that if you ever have a ratio between real assets, between one thing that cannot go to zero and the other thing that cannot go to zero, silver miners and silver, both of those things will never go to zero as a sum. And if you have this ratio with a historical mean between 10 and 20, even going up close to 30, you have that approaching the lowest that it's ever been, getting pretty damn close to zero. Okay? Especially in comparison, for example, 10, the ratio was at 10 in the year 2010, dropping down to 6 in 2011-12, and down to 3. Okay? The next step this could go is down to 2, 1, 0 sometime in 2018. If you ever have a ratio of real assets approaching zero, it's telling you that something unsustainable is happening. And when something unsustainable happens in these ratios, there tends to be a spring back in the opposite direction. So this is the spring back that we're talking about in the ratio. How does that manifest? Let's look at, for example, one example. This is Coeur d'Alene Mines. How does that spring back happen from such an oversold value? You have a valuation of one of these silver mining companies go up 1,000% in 7 months and then drop back 50%. Okay, so this is the kind of thing that we're talking about here. And mind you, Coeur d'Alene, as far as I'm concerned, Coeur d'Alene is one of the worst managed silver mining companies in the space. Yes, they extract a lot of metal from the ground, and I give them a lot of credit for that. They've got some great operations there in Idaho and some other parts of the world. However, they are continuously diluting their shares. When you look at a stock chart over many years, they continuously issue new shares. They basically take money from shareholders to finance operations when times go difficult for them. So this is not a company that I recommend investing in even now. However, this is to show you what can happen when you have a ratio. So all of that price action, the 1,000% gain and the 50% drop in Coeur d'Alene, is represented by this right here. What is going to happen when this ratio begins and moves from, where is it right now, 5.3, and it moves up back to 7 or 9 or 10, which is still low in the historic average? What if this ratio moves back to 20, okay, at some point over the next 10 years, let's say? So I think that the first move that we saw in 2016 is but the warm-up for the revaluation that can come. And this will, of course, take the backdrop of silver prices moving higher as well, as we discussed in the beginning of this. And I do believe that we'll be looking at over this time frame, over 2017, 2018, 2019, perhaps into 2021 or so, silver climbing back toward the $50 mark. Notice I'm not talking about silver needing to go to $300 an ounce in 2017. It doesn't need to do that in order for some of these companies to have these incredible leverage effects when you're talking about this generationally low valuation standpoint. Okay, so that's where we are right now. I think there's a ton of opportunity coming up, but let's watch this bottom in the silver price form. And if you're interested in this kind of thing, this is the time to be doing the research or to be studying and making your selections. And I do want to tell you one other thing too. When I first approached this sector in the mid-2000s, I fell for some very easy tricks to fall for when I was making my first investments. And the number one trick I will tell you to not fall for is do not fall in love with any particular mining company or any particular mining company's story from a fundamental standpoint. When you invest in a mining company, you have to look at it in a very scrupulous manner. You have to say, what is this company doing behind the scenes, and is the stock action matching what's happening behind the scenes? I'll tell you, I had a number of companies that I invested in back in 2007 or so that ended up failing over the part of the early 2010s. Why? Because even though the prices of the metals were going up, some of these companies simply were not doing what they were saying that they were doing. So you have to be very careful when you're investing in these companies. And that's why I launched this service, because I just said, you know what? There's no way that I could do this kind of research, that I could make these investment decisions without paying attention to what's actually happening on the charts. And if anyone else can benefit from that, then so be it. That's why I do offer the service that I offer. It's available on the website. And for those people who want a second opinion on any of the individual companies or investment decisions that they are making with regard to the precious metals, I do offer an independent perspective on that. I thank you very much for watching today. There should be an exciting low coming up here, but as usual, these lows in the precious metals form when you have other things going on in the news that are taking most people's attention away. So most people's attention right now, what is being focused on? Dow 20,000, all that's going on with the first few days of Trump coming into office. So all this stuff is happening here, and very quietly, I believe over the next few weeks, next month or two, you're going to have this low setting up in the precious metals, and most people will not be paying attention to it. So congratulations for paying attention at this point. I wish you the best over the next week and the several months to come, and I hope to see you this time next week. Thank you. Bye-bye.